This is an unexpected video series that I've decided to make as I delve into the world of extremely predatory online lending and some of these companies that, I'm not going to say the tricks that they use, but basically, that they're offering interest rates that would be extremely illegal, except for loopholes that they use, in particular with utilizing sovereign nation rules from reservations and Indian tribe land. So anyway, yeah, let's take a look at some numbers and get a better idea of what does predatory look like, because anytime someone's willing to offer you something and make it extremely easy and quick and that they'll put money in your account on the weekend, honestly, that is your dead giveaway that there is something in it for them, like very in it for them. So this is a loan I've been applying, and ironically, some of these predatory lenders I have actually been denied for more than I have been approved. So that's been a pretty interesting thing to see. They don't actually tell you why you're denied, but I have a hunch that it has to do with being, in a sense, almost too qualified, that they don't want someone who's maybe over a certain income level, or maybe they don't have a certain amount of debt. Like it's interesting to see that we have members at work who are really struggling to pay their bills, but that they'll get approved for these payday loans. And then there's me, who basically has a mortgage payment, and that's the only real debt I have to my name is my mortgage, and that I'll get denied for these. So anyway, this is one that I landed on after they farmed me out to like 12 different creditors. And so what I found interesting about it is, of course, they don't want to actually show what the interest rate is, but they do give you a range of what you'd like to borrow. And so we'll kind of walk through a couple examples of just how bad it is. But because they don't have the interest rate, sometimes it can be kind of hard for the average person to comprehend just how bad it is. So anyway, let's start with 500 bucks. 500 bucks sounds like a pretty normal emergency type of funds needed in the United States. And you can see down here that it says 13 biweekly payments over a 6-month term. Now, when a lender says biweekly payments, not as an option, but as a requirement, that is your first dead giveaway that it is going to be a very predatory lender. Biweekly payments, the intent behind that is that they need to collect as much money in as short of a period of time as possible in order to ensure that they get as much money back as they can. Because honestly, there's no way that they can expect even the majority, even the minority of these loans to actually pay back in full. And you'll see this in the numbers as we go through it, but especially if someone takes out multiple of these loans, pretty much all they need to do in this case is collect what would be about 3 biweekly payments, and that would be enough to come close to breaking even. So really, by the time they collect the 4th biweekly payment, that is something where now they're making profit. So anything above the 3 biweekly payments is money in the pocket for them, because they basically recovered the entire original amount of what they lent. So let's quantify this, and that's why I have this screen up over here. Let's say $500, and we've got, instead of 1 year, let's go with 6 months. And monthly payment, in order to get this, because we are talking bi-weekly, we're going to have to do some math here. So if I take the 144.24 times 26 bi-weekly payments in a year and divide that out by 12, so that gives me $312.52 a month. So the interest rate here that you can see is going to be 702.86%. So that means that in paying this loan back, for the $500 that you get to borrow, if you take the full 6 months to pay it back, 27% of what you pay is actually going towards the $500 principal. So that means that 73% of what you're paying is going towards interest. So what's likely is in the first, couple of biweekly payments, this is likely close to, or at least nearly, a reverse amortizing loan. If anything, it's going to, at minimum, it's going to basically be to where they're only paying interest on the first ones, or at least darn near close to it. But you can see here that short period of time, short dollar, or small dollar amount, 703%. For perspective, the state of Washington usury law is 18%. So that means that any institution that is headquartered in the state of Washington, that's doing normal lending, is going to be capped at 18% by law. There's maybe some exceptions to that, but really any interest rate over about 36% is going to be something that gets into payday lending, and that realm of interest rates. And these online lenders use a lot of loopholes to be able to provide a rate like this. So as you can see on here, though, it said that I was actually approved for $2,100. So let's say it's a little bit bigger emergency. Let's say it's $1,000, okay? And let's say we really want to pay it off in a 6-month term. So if we take the 288.46 times 26 bi-weekly payments in a year, and then we divide that out by 12, we are talking about $625 per month. So on this example, what you can see is that the interest rate is basically the exact same as what we had before. 27% going to principal, the rest going to interest. So basically a very similar situation. Now, what if we decided to do that on a 12-month term? Because paying back the $1,000, for the average person, it wouldn't be unreasonable to think that they might want a lower payment than $625 a month. So if we take the 166.49 times 26 by 12, so we have $360.72. So what's interesting here is you can see for extending that term out, they're going to drop the interest rate down to just a minimal 421% instead of 703%. But what I find really interesting is that you can see over that same time period, notice how the principal and interest payments, the proportions don't change. So even though the interest rate has decreased a lot, it looks like they are probably using a formula when setting up that interest rate to arrive at kind of that same breakdown. And let's do 9 months on this just to see if that actually holds true, or if my assumption holds true here. So if we take the 227.85 times 26 and divide by 12, so we're talking about 493.68. And we've got 9 months on $1,000. So, yeah, so my assumption holds true here. You can see where the payment breakdown is the exact same thing. So it looks like they're always adjusting the interest rate in order to make the number of months based on the dollar amount come in at an interest rate that is affordable. So, and by the way, I say affordable entirely joking, because 421%, or in this case, 575% is not affordable. Now, let's say I take the biggest offer that they have, And, we're going to do 12 months because otherwise I think that payment would just scare the living daylights out of me. So we've got the 349.63 times 26 biweekly payments divided by 12. So on this one, we're talking about 757.53 for 2,100 over 1 year. So again, we get back to that interest rate of the 421%, still staying with the same principal breakdown here. So the total of the 12 months of payments, are really another really easy calculation to be able to make is to be able to say, okay, we've got a 12-month term, 26 biweekly payments at this. And you can see that in my original number here, this $9,090.38. That's an easy way to figure out how much is it going to cost me to take the full term to pay this back. So without really getting into the interest and principal breakdown argument, you can really easily, and this is what I always tell my lenders to do, is do the math on this, look at the $9,090 here and say, does that sound like a reasonable amount to pay back for borrowing $2,100? Let's just say we did that same $2,100 on like a loan at the financial institution that I work at. And let's do this actually. So let's use this. So amount borrowed, let's say $2,100. Let's assume the highest interest rate that my institution charges, which is 17.99%. And for simplicity's sake, let's just use monthly just to make it match up. Length of the loan, let's go ahead and start with 12 months just to see what... not 12 years, 1 year. So fees, no fees. Okay. No, not 210, so 2,100. Okay, so to do $2,100, your payments are going to be about $193 per month. Okay, now that compares to the $757.53 that you see right here. Remember, this is the exact same term, 1 year, right? 12 months, same dollar amount, but the interest rate is what makes all the difference on this one. So if you take the full 1 year to pay it back, well, I don't know why it's showing me if interest rate goes up by 2%, but here, if the interest rate stays the same, you're paying the $193 a month, your total paid back is $2,310 versus the principal balance of $2,100 that you borrowed. Now, remember, compare that to here, which is $9,090.36. Okay, if that doesn't hit home, I really don't know what will, because in this case, we're literally talking about just shy of $7,000 of interest paid on this loan type here versus $210 of interest paid here for the same exact loan type. Okay, that is just how insane the differences are when it comes to these loan types. So, going back just as a quick recap, biweekly payments as a requirement, or maybe if they say they'll offer you a discount if you do biweekly payments, that's your first sign. Second sign is going to be that the biweekly payment, when added together, is going to be some obnoxious number that the average person likely can't afford. I mean, I don't know about everyone that watches this video, but $757 a month is not what I would call affordable. On my budget, or really on, for the most part, anyone's budget, even if you made a pretty significant amount of money, $757 is a huge chunk of money. Whereas when you look at the actual calculation over the same time period, using, and remember, this is also the worst interest rate that my institution is allowed to charge. So this is assuming that you have a credit score that's under a 550 if you were to do something like this. Now, the interest rate would be closer to, I would say, about 10%, 11% if you had really good credit, which would lower that number even more. Another way you can also figure out if something is predatory is, let's say you change this from 1 year to 3 years. So if you took the full 3 years to pay this loan back, you're talking about a total amount of interest paid of $633. Okay? That still doesn't even begin to come close to what would be paid in the 12 months on this. So if you were to take a predatory loan on a very short term and compare it with a doing the same loan with like a brick and mortar or a just a lender that actually has interest rate restrictions or rules, and you extend out that term on the institution that has restrictions or rules, what you'll find is that the interest doesn't even come close here, because even if you subtracted off that 600, let's just round up, say $700 on here, you're still talking about close to $6,300 of additional interest paid, and that's for you to pay it back over an additional 2 years. So, you could literally take 3 times the amount of time to pay the loan back, and you're still not even scratching the surface in terms of how much interest is paid here. So anyway, if anyone has thoughts, would love to see some talk about this in the comments. But what other predatory lenders have you guys seen? And are people aware enough of how predatory some of these rates are? When I talk to people, I'll hear 30% is a ridiculous interest rate, and I let them know that's not even in the ballpark in my view of things. There are some people that should be paying 30%, and usually it's because they had their car repoed 3 times, right? Like it's just, there's certain people that they've put themselves in that position, and I actually don't have any problem with lenders that charge that much. But when you have someone that's charging 400, 500, 700%, the highest I've seen is 773, I think, just right off the top of my head. But I would love to know what these other lenders that are out there that are doing these kind of things, because frankly, this has to stop. There's no way that the average person can be subjected to these types of things. And yes, I do admit that people need to take ownership of their actions, but at the same time, these loans are here because they prey on people when they're at their worst. And that's the reason why I really have a problem with them, is that it's one thing if you knowingly go to a place and sit down with someone, read through the documents and sign it. But a lot of these places, they hide things towards the end and just get you to, check some boxes. And that's kind of the downfall or the issue of technology. So anyway, I will stop with my ramble on this. Again, would love to hear of other lenders that people are aware of, or any thoughts that you have about this, any other tips or tricks when identifying predatory loans. But this is quickly becoming a very big problem that I think we need to address, especially because it's hurting the people that can least afford it.